Hello traders, so welcome back, and this video would be the next part of the CRT series or the range trading series, whatever you call it. And this is the beginning of the journey, right? So we already know that price delivers from one point to another point. The point which is refers to the opposing PD array or the liquidity point, right? So we are gonna position ourselves in between those point. That's the journey, right? So in the journey, the first point, which is also known as the entry model or the entry point, which is the order block. According to CRT traders, it's model one. So how to trade the model one, where to see it, and when to use it, which is the key thing, and how to use it, right? So this video is gonna all about the model one, the classic ICT order block, right? So let's go to the video. Okay, so these are all the content of the today's video. First, we are gonna see the introduction, which is, I'm not gonna say a fluffy paragraph, just simple introduction, and the time frame alignment, which is the most important thing. Then the order block, yeah, the classic order block. So the last one is when to use, where to use, and how to use those protocols of the model one. And we will see some basic examples of the model one also, right? So keep your pen and note ready. Take every important point which I'm saying in this video, and the most important thing is to gain experience from this video. So how to get that? Just reverse engineer the trade which I'm giving as example here, and also backtest yourself into your chart. Then you will get an idea about this concept. So the introduction part, and all the credits goes to our lovable mentor, Dr. Romeo, right? So he's the founder or creator of the CRT trading. So this is his one of his tweet, uh, she tweeted on September 3, 2025. So you can see here, I preach that all of your trades should look the same. It's either going to be a model one or it's going to be a true market structure shift, right? So market structure shift we will see next, but today we will see about the model one. If it's anything else, you are gambling. So that's what I'm saying. From one price point to the another price point, which is the opposing PD arrays, there will be specific points in which you can use to position yourself, right? Other than that, it's simply some distraction noise which is in the trading community, so you don't want to focus in that. If you keep addicting to that dopamine hit, like fancy concepts, fancy model names, fancy entry model strategy, blah blah blah, then definitely you will never gonna be profitable in this trading industry, right? So remember that. Okay, so let's move to the next slide. This is the basic time frame alignment, which is the most basic and essential thing to the trading. Even if you're using whatever concept it is, SMC, ICT, CRT, just simple price action, whatever it is, we have to switch to multiple time frame, right? So if our context is in one time frame, we have to get the confirmation from another time frame, right? Which is the lower time frame. So you can see, we have to see the context or the key level if it is in the monthly time frame, or we are marking the monthly CRT, then our model 1 should occur in the daily time frame. So same applies to the weekly, and the model 1 should occur in the 4 hour. So same thing applies to the daily and 1 hour model 1, and also 4 hour key level and the 15-minute time frame model one, right? So this is the basic. Always you have to, once you have marked the CRT, then you have to wait for the model one in the lower time frame, right? This is the model one. So actually it is simply the classic ICT order block, bullish or bearish, right? But the thing is, we have to know when to use this order block, where to mark it, and how to use this as our entry point. So we have to know these things. So in this slide, you can easily see the Romeo's tweet, right? So this is exactly explains when and how to use the order block. You can see, so you do realize all we are waiting for is to the candle to open, stab into a liquidity pool, right? So this is comes under the word question. So this is the answer, and create a model one or a true market structure shift. So this is exactly should happen at the key time, which is our classic ICT kill zones, London and New York, right? So this should happen at that specific time. Then you enter and trade it to 50%, and then the CRT high. So this would be our first and second target, right? So don't let anyone fool you into thinking CRT is complex. So as much as make your model simple. So the more you complicate it, the more you're gonna lose in the market, right? Okay, so in the first example, this is the Euro USD recent price action, the monthly chart. Uh, After the external high is taken, we can clearly see that the market comes to take an old low, but instead of taking that low, it created an SMT with pound, right? So after that, we can target the first major liquidity, which is our CRT high, range high, right? So we have marked our range in the monthly chart. So now according to the time frame alignment which we have learned earlier, what we have to do now, we have to seek for the model one in the daily time frame, right? So let's see, is that accurate? Now we could clearly see that in the daily time frame we have our model one created, which is the three candle order block. So we have to mark the thick down close candle which tapped into that liquidity area, right? So once we have marked that level, we have to wait until the price reach out that level at a specific time. Once it reached, we can take our entry. So you can see it's clearly delivered a nice trade, right? So that's it. This is how you have to mark the monthly CRT levels, then the model one, and entry in the daily time frame. This is the another example of the model one of daily CRT, and this is also the euro chart, which is the delivery of price in the current week. And you can see that the market has tapped the daily fair value gap on Wednesday with the SMT in pound. Pound already took the Monday high, so we can say that Wednesday high of the week, right? So now if we mark the levels in the daily time frame, so according to the time frame alignment, we have to mark the model one in the 1 hour chart, right? So just mark and let's see how it played out. I have taken the 15-minute chart here because for this trade it feels some more cautious than the 1 hour. So after, you can see that I have marked the midnight opening price because most of the beginner traders uh, falsely mark the soup high and don't wait for the another turtle soup after the midnight open, right? So once I have marked the midnight open, I waited. Then during the key time, which is the London key zone, I have got another turtle soup of that old high. Then I have got my entry in the 15-minute model one. After that, I have entered and it delivered a beautiful trade, right? So 4 hour daily CRT, then 1 hour or 15-minute model one, right? So this is how you have to trade. So if you have any another comments, just tell in the comment, or if you want to solve your doubts or queries, you can feel free to contact me via Telegram. And with the Twitter, I will mostly update the daily outlook, the weekly outlook of my post and trade reviews in Telegram also. So if you are still not joined, then you can join that also. So good luck, traders. Bye.